The crypto winter is likely ending. That's very good news for the crypto stocks, but also a good risk on market signal. We still expect March to be an up month. And as I said, markets bottom on bad news. And that's what we see, that markets tend to sell the buildup and then buy the invasion. These are the last 8 major conflicts from the Vietnam War all the way to last year's Iran conflict.
Tom Lee begins with a question that many investors instinctively ask when geopolitical tensions erupt. If the world suddenly moves closer to conflict, shouldn't financial markets fall? Over the weekend, the United States began combat operations against Iran, immediately raising concerns about global stability, energy supply disruptions, and the potential for a broader regional war. In moments like these, investors often assume that risk assets, from equities to cryptocurrencies, must inevitably decline. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
We believe, and we've been talking about how we believe March is likely an up month for equities. And over the weekend, the US began combat operations against Iran. So the question, of course, in your mind is, does the Iran war cancel an up March? Our answer is no. We still expect March to be an up month. And as I said, markets bottom on bad news. And that's what we see, that markets tend to sell the buildup and then buy the invasion. These are the last 8 major conflicts from the Vietnam War all the way to last year's Iran conflict. Similarly, we could see this with Bitcoin's price. Bitcoin actually fell on Saturday as combat operations were announced and then began to rally. And in fact, Bitcoin is now over 70,000, which is a multi-month high. I think one of the reasons for this is the market's not expecting this to be a war that engulfs. Similarly, markets are betting on this being a short conflict. In fact, probability of a ceasefire by March 31 is over 50%. And the VIX is saying this too, because if you look at the light blue, that's the VIX last week, compared to the dark blue, which was VIX on March 2nd, and you can see the VIX spiked. But the VIX futures contracts, 1 month forward all the way through 4 month forward, are barely changed. So the market sees this conflict as a short-term shock. And finally, one of the risks, of course, is the closure of the Sea of Hormuz, where a lot of crude oil and natural gas flow through. And the market does see the odds of it being closed at 61%, which seems high. But keep in mind, oil didn't really react as sharply as you thought, because it rose to $75 initially, but it's currently at $72, which is about a 10% gain. So I think March is likely an up month, and there's other reasons. I think the Mag 7 valuation reset has already happened. We can see this on the PEs, that Mag 7 PEs are lower than a lot of consumer staple stocks now. We also know tech is one of the most shorted sectors today. I think the software Armageddon, a lot of that bad news has been priced in as well, because software stocks have begun to rebound on a volume spike. And in fact, it's one of the highest volumes ever. And you can see software is right at an important trend line. And we have an FOMC meeting later this month, but I think the inflation data is pretty tame. And the economy remains healthy. The ISM manufacturing for February came at 52. Keep in mind, it spent 3 years below 50, and the last 2 months have been solidly above 50, the highest reading since 2022, so 4-year highs. And you've seen this chart before. Basically, the ISM peaking is really more coincident with the market top, but the current readings of ISM are associated with markets in midstream. We've got more data for this week of March 2nd, including the ISM services, Fed Beige Book, and jobs report for February and January retail sales. Another thing that we've talked about is the crypto winter is likely ending. That's very good news for the crypto stocks, but also a good risk on market signal. And finally, March probabilities favor an up month. And I've covered this before, that if the first 5 days of January are positive and January is a positive month, well, that's 36 times in the last 75 years. And on average, March is a positive month, up 2%. That's 24% annualized, so it's pretty good. And you can string it together with April, May. In total, a pretty good 3-month stretch. So let's talk about Granny stock performance now and looking at individual names. The top 5 performers for the Granny Y, Granny Original, and Granny I were Netflix, GE Vernova, Texas Pacific Land Group, Amgen, and Costco. And the bottom 5 were 1OK, NVIDIA, Goldman Sachs, PNC, and American Express. So a lot of financials. On the Granny J side, top 5 performers are IonQ, United Therapeutics, MP Materials, Albemarle, Bloom Energy. And the bottom 5 are Armstrong, Pure Storage, Donaldson, Western Alliance Bank, and Array Technologies. So, and let's look at themes. Top is seasonality. The second is millennials, and then cybersecurity. For the large cap ETF Granny, the price as of February 27th was $24.96 and total assets of $4.1 billion. For Granny J, which is the small mid-cap Granny, the price as of February 27th was $27.16 and total assets of $389 million. And for the income Granny or Granny I, the latest price was $19.95 and total assets of $58 million. Let's cover performance for the past week. Granny declined 0.28% last week compared to a 0.42% decline for the S&P 500, or relative outperformance of 14 basis points. For Granny J was down 2.3% compared to down 93 basis points for the Russell 2500, or underperformance of 143 basis points. And for the income Granny, the price, the total return was minus 0.17 compared to a 0.42% decline for the S&P, or 21 basis points of relative outperformance. So let's look at year-to-date. On a year-to-date basis, Granny is up 0.89% compared to 0.68 for the S&P, which is 21 basis points of outperformance. For Granny J is up 6.39% compared to 7.56% for the Russell 2500, or relative underperformance of 117 basis points. And for Granny Income, or Granny I, up 0.07% compared to a 0.68% gain for the S&P, or 61 basis points of underperformance.
Looking at specific market segments, Lee highlights the performance of several investment strategies and exchange-traded funds associated with thematic trends. Certain companies have emerged as top performers within these portfolios, including firms operating in technology, healthcare, and energy infrastructure.
How Bitcoin will often see a sort of a slight renewed interest in early March. And you can see in, 2018, Bitcoin found a lower high in early March. If we go look at all the days for each year, we could sort of put those in like a table like we did yesterday. So you can see here we had a lower high in 2014 on March 3rd. Okay, so 2014 it was March 3rd. I guess we can write that down. So we have what? We have 2014, it was March 3rd. 2018, what was it in 2018? In 2018, it was March 5th, right? March 5th. 2022, I think it was March 2nd in 2022. Yeah, March. Let me just zoom in to make sure. So it was March 2nd with a sweep of the high on March 28th. So March 2nd with a sweep of the high on March 28th. So let's go ahead and put that in. So March 2nd, swept high March 28th. So 2026, so far, we don't know what it's going to be, right? I mean, it's always possible that it's already in. If it is, that's the most pathetic bear market move in March we've seen. But that's what you have, right? You have March 3rd, March 5th, March 2nd. So far, all we've seen is a rally into March 2nd. Now, this is very weak so far. And one of the reasons is when you look at the prior bear market rallies in March that have occurred, they got us back up to the bear market resistance band, right? You can see March 2022, Bitcoin hit the 21-week EMA. March 2018, Bitcoin even went above the 21-week EMA. March 2014, what do you notice? Bitcoin went up to the 20-week SMA, right? Like, so far, every March, it's gone up to those levels. This time, we're so far away from it, right? Like, we're not even close to it. The 21-week EMA is at like 86K, right? Maybe like 85K when we look at like weekly candles. So it's at a little less than 85K. That kind of shows you just how weak the market has been, because every other midterm year, we would have already rallied back up there. This time, we're nowhere close. And what I would say is, you have to at least look at this pattern right here as well, where after Bitcoin, broke down from the highs, after I broke down from the highs last cycle, if you exclude seasonality, you can see that Bitcoin really struggled for a few weeks, and then eventually it then dumped below the 200-week moving average, right? So that is why you have to be careful and be a little timid about trying to time sort of these counter trend rallies, is there's no guarantee, Like, it's possible that this move right here is this one, and that we've gotten this drop down, just like here, and now we're just consolidating for a few weeks before we drop down again. And so it's relevant to think about it like that, because a lot of times Bitcoin will find resistance in early March. Now, in 2022, there was resistance in early March. You can see right here at the 21-week EMA, we got a pullback, and then we went right back up again and swept the high, right? So there's a lot of different ways this could play out. The point, though, is I think it makes sense to operate under the bear market state of mind, where the natural assumption for now is that Bitcoin is putting in lower highs and lower lows. That is the assumption. And so you got a couple of choices. You could try to time every counter trend rally, or you could just kind of kick your feet back and wait for this thing to play out, right? Now I'm doing the latter. I'm just trying to wait for this whole thing to play out. Couldn't tell you where every lower high is going to be. Couldn't tell you where every lower low is going to be. But usually in bear markets, they occur every few months, right? So we had one in November. We had another one in February. We'll probably have our next one before June. April, May timeframe. Seems like that could be when the next major low for Bitcoin forms. And if you look at the year-to-date ROI, let me actually reload this because it probably hasn't updated with today's data. I guess it had updated. If you look at 2026 and look at the average of prior midterm years, and then we look at, 1 standard deviation, Bitcoin is currently underperforming the average of prior midterm years. Not by a lot, but by a little bit. If it were actually at the average, Bitcoin would only be down about 15% from the yearly open. Well, the yearly open, if we go back up to where Bitcoin was, say like in January, 15% down would put Bitcoin in, say, like the mid 70s. So you can see that Bitcoin is underperforming what it normally does, but it's also generally been tracking the average as well, right? Like, it's not that different. And so when I look at a chart like this, it's hard to know like when each move is going to happen, like when we actually get those moves back up to the top of the bands, when we go to the lower part of the bands. Earlier this year, we're kind of at the top part, then we went to the lower part. Now we're a little bit below it. But ultimately, it's hard to assume, it's hard to ignore this trend, right? Like, it's hard to assume that it's going to be anything different than lower lows and lower highs for a little while.
Markets often sell aggressively during periods of rising uncertainty, only to stabilize and recover once events actually unfold. The current conflict involving Iran may represent precisely such a moment, a short-term shock rather than the beginning of a sustained downturn.